Good afternoon. This is Tuesday afternoon at 3:30, and I normally would have a short webinar like this one to introduce some short concept. And we always trying to reflect on what people are asking when we are doing our webinar. Sometimes if there's a new things come out, we talk about it. But like today, because it's a tax season, right? So we see people asking us questions. So we kind of put these questions together and and have a little knowledge bite for you. So let's just go ahead and start working on our webinars, right? So first of all, I want to introduce to you of our website. This is our communitycpa.com website, and you can come online to see what we have here. We have a onboarding with us section where you can do what I called a silent onboarding, which means that you click that button, you sign in, and you can start uploading your information. Our onboarding team will actually reach out to you, so you don't have to wait for office hours to uploading and the onboarding. You can do it anytime. Of course, our appointment button here also gives you the people that you can make appointment online. These are video appointments, so we go online and meet you on Zoom and they answer your questions. Some of the folks use this one to do their tax review. They did their taxes. They just had one or two questions for us. They come over here to do. Obviously, our client portal is if you're our client, you have multiple companies, and we have this one place for you. It's really, really good because it's a portal that we designed. It doesn't look dry. It is very intuitive, and then you can see all your accounts. You can see all your accounting, tax, and the payroll information that we uploaded for you. It's just like your little hub for your financial side of information. Of course, paying invoices, that is just what it is, right, folks? And you understand what we have on our website. So this is like our website I was just mentioning to you. Now, let's go ahead and work on our webinars today, because today I want to talk to you about Section 179 and the bonus depreciation. I know you heard of these things, but you probably just get a little bit confused and not sure, what time do I use Section 179 and when did I use bonus depreciation? I thought someone said that is going to be done. And so what am I doing? Can I use both? Can I use which one is more beneficial, right? So you have a question related to that, but let us just kind of clean up this area of thinking so you can be an expert in knowing whether you want to do Section 179 or you want to do bonus depreciation or you want to do both, right? So yes, you can do both. And let me start our webinar by show you our presentation slides. Section 179, tax deductions with bonus and deductions with bonus depreciation. So that kind of give you that two buzzword, 179 and the bonus. And it is really not that strange. I often, because English is my second language, so a lot of times some words in English doesn't really register to my skin or like making me feel like that's the word supposed to use. I always felt like I have to hard code this word with something else, like equity. The word of equity actually doesn't exist in my time when I grew up in China, because it's a communist country. Everything is owned by the country, by the Communist Party. So equity is actually a very capitalism, a negative word. So we never even learned that word. Then when I immigrated to Canada, then later on come to US, and then, I'm in this profession, so how could I not know equity, right? But I actually, in the very beginning of the time, equity is a word that I hard coded it to the balance sheet, and I didn't really understand it to my skin per se. So sometimes when people say Section 179, you don't have to be like a tax expert goes, oh yeah, I know what that means. No, you don't need to. You just want to hard code that into an area in your life. Okay, this is related to when I buy big things. When I buy big things for my business, I have this area that I need to tap into, right? Our second slide in our slide package is to introduce, to brag about our firm. I sometimes felt like, why do I need to brag about our firm? You can see us on the internet, which is so true. But I do want to point out a couple of things to you. We are setting up a new branch in Houston, Texas. So if you happen to know people in Houston, tell them we are coming, right? And also, I have served on National Taxpayer Advocacy Panel. This is a federal advisory committee to IRS. So I am proud and I want to brag about it to give you one more dose of confidence on what we know and what we do. And I also wrote these two books. It's on internet, it's on Amazon. And the first book is about how you start a business. The second book is about how you grow your business. And I am writing the third book, which is 2 p.m. It's about expansion. In fact, these books are reflected on community CPA's self journey. It is us started back in 1998. Then we grew for the last 20 years. And then we are on the journey to expand for the last 6, 7 years. So I have a lot to write about. I also have a lot to share with you because the clients that we have, the tens of thousand clients we have, are walking the same journey with us. It's quite exciting. And I wouldn't say only exciting with a smile. It is excitement sometimes can make you pee in your pants, right? It just can be a scary exciting, but I guess that's just how life should be. Otherwise, we are too bored. Am I right? And then today, I'll try to make my session not boring. I'm trying to just put in ideas in your mind so you can be a genius. Even if you go to any other places to do your tax, you tell them that, look, I have purchased these things for my business, and I want you to consider Section 179 first and the bonus depreciation second. At the end of this slide, I'll give you one example that would really lay out the numbers for you, and you will get it. I promise you. Of course, advised by our attorney, and we need to put out this clear statement saying that no responsibilities, disclaimer, free training, free sharing, free webinars, folks. Just make sure that you take the free knowledge and understand it first and digest it first and then vet it through your professional people you trust first before you implement. Okay. All right. So why, my question is that why it is important to understand depreciation. Depreciation is what we call the phantom money. And when you buy a big equipment, say $500,000, and your cash flow already out, you bought $500,000, right? So you cash it out and then you feel tight and you used up your money. And the 500,000 equipment cannot be write off for, generally speaking, by generally accepted accounting principles. Because the accounting world will tell your accountant that, oh, no, don't write it all off. We can only depreciate it based on the requirement, based on the GAAP standard. So an equipment maybe have 15 years life, then you depreciate by dividing 15, come up with the amount you can write off in your income statement. But Section 179 and also the bonus depreciation are the one that walking into your life and making your business do more. This is the government incentive program to help business to invest in their asset, helping business to grow helping infrastructure of your business to grow. Because those deductions are not small deductions. They are not, pots and pans. They are equipment. They are vehicles over 6,000 pounds. They are leasehold improvement that you just spent $250,000 for. So these are big items, and we call them infrastructure. And if from a country standpoint, if the entrepreneurs, like people like us, investing in infrastructure, that is the ultimate strength for the economy. So that's why the government give you these programs and wanting you to use it. Section 179. Section 179, this is the basic. I want you to remember a couple of things. And what most important for our small, medium-sized business, I'm not so worried about the limitation. There is a threshold 2.89, and in 2023 and the 2024 is 3.05 million. Don't even bother with that details, and I just want you to remember. And you can use Section 179 to reduce your profit, but cannot create losses. Just hear me. So let's say in a year you made a $500,000 profit. You're just getting ready to pay taxes. And then you came to Ying, to our firm, and I said, okay, let's purchase equipment that you always wanted to purchase, put that in service before the end of the year. We write off that equipment, 500,000, we're gonna write it all off. Why can I say that? Because number one, it's an equipment. It is an infrastructure, asset equipment that you need for your business. Number two, you're gonna put it in service right away. Number three, and you had a profit of 500,000, and I can write off Section 179 for the full amount. So you ended up what? You ended up paying no taxes in that year because you wrote off the equipment via Section 179. And what type of things can go into Section 179? I want to tell you that if you bought a commercial property, and there's only kind of two categories you can do Section 179. Number one is the interior portion of the non-residential buildings work, like painting, interior work, interior fixtures, things like that. And they are often called a leasehold improvement. If they're non-residential building, you qualify. And you also qualify to deduct HVAC, those air conditioning unit, your fire protection system. That's a lot of money. We just had a client put in the fire protection system is 90,000, so not a small amount. And the security system, the roof, okay? So those are the things 179 can do. And of course, equipment, right? So those are the things that you can depreciate. Let's look at the deduction limitation. I already mentioned to you that you've got to make money. If you don't have profit, can you still use Section 179 to reduce the 500,000 equipment? The answer is no. You cannot, because you cannot use Section 179 to create loss. Got it? You got it, right? All right. And then I know you have another question related to pass-through. I'll cover that just in a moment. Now I want to lead you to bonus depreciation. So what is so good about bonus depreciation? The bonus depreciation depreciates most of whatever Section 179 can do, bonus depreciation can do, okay? And then the bonus depreciation is tapering off as we go. In 2022, if you remember, bonus depreciation, you can write out the whole 500,000. We were using that as example. Okay, so you have 500,000 equipment you purchased. Bonus depreciation in 2022, we can write all off. But what if I didn't have the profit? Let's say that year in 2022, I have a loss. And so I bought a $500,000 machine, and Ying told me that Section 179 doesn't work. So I have to use bonus depreciation. Can bonus depreciation create loss? The answer is yes. So if I did bonus depreciation for that same year, Section 179 couldn't do. I created a $500,000 loss right away. And why it is, I'm so excited with loss, right? In business, depends on what kind of section, what kind of structure you have. Let's say you had a S corporation. If you have $500,000 loss on K1, what does that do to your 1040? It will wipe out your W2. Say you have a W2 for 500,000. It will offset your W2, make your AGI be zero, and you get all your tax withholding back from that year. Yes, you'll have a big refund on your 1040. Now, that is something I want to draw your attention. In 2023, right now, we are dealing with 2023. 2023, you have only 80% of that 500,000 can be deducted as a bonus depreciation because they lowered it from 100% to 80%. And in 2024, this year we are in right now, is 60%. So, but don't be disappointed. That doesn't mean that, oh no, Ying, I would forever lose my, I will lose my chance to deduct things fast. You didn't. I will explain to you. Section 179 versus bonus depreciation, and they are very similar in terms of what can be used, right? The here it mentions about there are some limitations. So there are a business taxable income limitations. That is what I was talking about. If you got no profit, you use Section 179, now a little waste of your time. Okay? But if you got no income, you want to use bonus depreciation. But if you have a little bit of income and you want to use a little bit of 179, then the balance you use bonus depreciation. All right, but you may say that, well, is there any limit for bonus depreciation? Of course, I just mentioned that to you, right? Because it's tapering off. It is going away. It is 60% now in 2024. Last year, which is 2023, we're working on 2023 taxes right now. That is 80%. But remember, you should combine them. See how 179 does for you, and then use 179 for whatever profit you have. Then on top of that, do bonus depreciation. Okay, what is the best strategy? So the current tax saving strategy is to write off as much of the cost for the qualified asset via 179, then claim the first year bonus depreciation. So that's kind of what I just was saying. I want to show you a example. I can't wait to tell you this example because I want to read through this example with you because that's the only way I will knock that concept into your mind. You will be like, okay, I got it. Scenarios in 2024. Your calendar year C Corp placed in service of a $500,000 asset that qualifies for Section 179 and the first year bonus depreciation. However, due to taxable income limitation, the company's Section 179 is limited to only $300,000. Why? Because they only had $300,000 profit. So you can deduct $300,000, zero out your profit. Then you can use 60% of the leftover amount because you bought a $500,000 machine. 300,000 already went over to the 300,000 already went over to Section 179. So you got 200,000 left, right? This 200, you're gonna use 60% of that for first year bonus depreciation. 200,000 times 60%, it is 120,000. So total is 420 in 2024. You can write off. You're only left with 80,000, the purchase you had for that equipment you did not deduct. So your total deduction was actually 84%. So, ladies and gentlemen, you see what I'm saying? So, you want to understand the difference between the two, and you want to snip them together and figure out how to use it all together. All right. Now, conclusions. Managing your tax breaks. It is so important for you just know. I always said, how we went, I remember in my younger days, I go to the flea market and I like to bargain. Thinking of those days, I would bargain for $1, $2 off, and stuff like that. But I learned when I bargained that, I learned that what are the things can bargain easier, what are not. So next time I don't waste my time and arguing, and I still couldn't get the bargain. So the tax breaks is like the bargain. It is like the bargain that you need to know, then you can apply. But if you did not know, you didn't use it, so it is really nobody's fault. It's yours because you did not know. So coming to this type of webinars we have in the system would really just give you that shallow. I call it shallow because we don't go deep, but that shallow understanding would sail you through the sea. It will do it for you. You just need to know where to launch your boat. So you can go from shallow to deep, and people will help you go there when your business is big, and we know exactly what more tax break you're going to have. To name a few, have you ever considered R&D? Have you ever looked into work, what do you call that? Work opportunity credit. Have you ever looked into medical insurance premium credit that giving to small businesses? So there's so many tax credit, tax breaks that you need to take, and you want to be on our webinar or just give us a call, bring our staff, your case, we tell you. Of course, this is the partners we have in our team. And if you look at what we are all good at, I didn't put anything under me because I think I'm good with everything. Oh my gosh. So such a, shameless bragging, right? So you can see our expertise in certain area. Just come over and, subscribe to our channel and, coming in to talk to us, then do your tax nicely, brilliantly, smartly. And there's so many ways to do the taxes, right? You would be so thrilled to pay taxes. I know that all of our clients, reasonable people, if we make money, we pay taxes, right? The only benchmark we have in place is that we want you to pay tax correctly. We want you to not pay tips to IRS because they don't really care. They don't want you to pay tips. If you really have a lot of tips to pay to nonprofit organization, support the community, and really do good in your community. That is a contribution. But for IRS, just gonna do what we need to do and making sure you take all the tax credit you can from them. And Community CPA's website is here. Catherine at Community CPA's email. That is where you can voice your desire to hear what you need to talk about. And our phone number is right here. We open 6 days a week, not because it is the tax season. No, we open 6 days a week. From the first day we started the firm, never changed. We're a whole bunch of workaholics here, but better than any other holics, I always say. So, we're here. We support you, we help you, we cheer on for your growth, and we want you to be successful. We want you to be as successful as Community CPA itself. And I will talk to you again. Bye-bye.